Hello, folks, and welcome back to another episode of Money in Motion. I'm not going to sit.
Are we good now? What the hell was that? Just in case you didn't catch it the first time around there, go through it twice. Good morning.
Okay.
Happy Monday, starting the week. Welcome back to another edition of Money in Motion, joined with Monte here.
Yes, get all the comments about my hair out of the way now. This show's about the markets, not on my hair. Just decided
You're making it about your hair.
No, the comments are, not me. Yes, I was in a head-on collision with a hydrogen peroxide tanker, and that's essentially what happened.
I would just say it was for charity.
That's what it was for charity. Yeah. Is it too late to say that? Anyways, plenty to talk about today. I see some good questions already. Mike asking about algo. I'll talk about algo for you, and I'll also talk about a few others as well. CJ, really excited to hear, the new data that's come in, how traders are positioned, what to expect for the week ahead. I do think this is going to be an interesting week for markets. It seems like this is the most split, for me at least, coming into the week between bears and bulls that it's been in a long time. And I think that could be significant of a turning point or not. We'll see. But anything you'd like to start off with today, my friend?
Yeah, a lot to go through. I guess I will start by saying this makes me super bullish. Yeah, this is actually one of the first times I've been short equities in a long time, or at least since I can remember. But yeah, let's start here with ES. So ES and Dow are like pretty decent short signals now. If you were to combine Russell, Dow, NASDAQ, all the major US equity indices, retail traders, otherwise known as small speculators, are net long for the third week in a row. And so we always look to typically fade them, especially as price action is starting to, really like come down and do the opposite of their previous view. So, ES, as you can see on the commercial oscillator there at a value of 18. Typically, I like to look for single-digit values before I start shorting. So if we look at like NASDAQ, let's see, we're in like the 30s, somewhat neutral, but really the key and the primary indice that's been showing a lot of like commercials selling over the last week has been Dow, which interestingly enough had been one of the top performers last week. So that's kind of interesting, or excuse me, the week before. So, short Dow, I think, is an interesting hedge here to any long equity exposure, or just a short, outright based on the COT metrics. And, you've pretty clearly defined risk above 35,000, at which point, I could think about flipping long on, something like Russell or playing the rest of this trend. But equities in general are, they are kind of weak, and they're giving the first sell signals that we've seen, or short signals that we've seen all year, and the first one being in Dow and likely ES as well. So I think that's pretty interesting. It makes me a little bit cautious, and I think we should talk about last week as well. There's some important points, like the concept that earnings and economic numbers were pretty good, generally speaking.
Yeah.
So due to the fact that we closed down, Apple gave back, roughly 2 months of gains within one session, down like 3 or 4%. So that's a pretty big news failure in my mind. I think it warrants some caution into this week. The last thing I do want to show in terms of like a technical perspective, so, you have the three major indices, Dow, NASDAQ, S&P. NASDAQ usually being the most volatile, followed by S&P and then Dow. In an uptrend that's like very strong, typically you would want the most volatile indice to be leading from a technical perspective as well. Whereas like that's not really what we saw last week at all. We actually were unable to make higher highs in the Nasdaq, which should lead in an authentic bull run. Whereas S&P, you know, didn't really lead either. I mean, it did kind of make a higher high, but I thought it was interesting that Nasdaq made a lower high, whereas Dow, which should be the slowest or weakest, if you think about it that way, um, was the strongest performing asset. So maybe that means that like the rotation of capital that we were talking about, the rotation from Nasdaq to ES to Dow to Russell, might be kind of over or paused with in the short term. But I think that's kind of a point you could say maybe for the Bears. But
Most definitely. Most definitely. I mean, you've been watching that closely. Also, the Russell as well. So some interesting price action there, definitely. And there'll be one thing I think that'll be an important factor in those indices, and something that I think is worth watching this week and today in itself is the DXY. We've talked about the critical nature of the DXY and how it has typically an inverse relationship with equities and crypto, although Bitcoin hasn't done much of anything, which I'll get to in a second. But the DXY here, this is the 15-minute chart. You can see it perfectly bounced off this 102.2 level here. So you have some clearly defined levels of resistance for the DXY. If we break above this level of 102.2, I would consider today risk off. If this marks the top of the day and we start to head back down towards the 102 level, then we could see some risk on price action. And if that continues down towards 100, then yeah, we could see some very risk on price action. So this is a very important indice to watch. This is the 15-minute chart. As you can see, we already wicked up to 102.2 exactly and found some resistance. I would watch this closely as a gauge for risk this week. But when it comes to risk, if you're looking for something that has none, check out this chart. This is Bitcoin. This is Bitcoin's weekend. I don't know about you guys, but if you made any money trading this, you are either a robot or a wonderful mind, because this is just the most range bound weekend I've seen in a long time. Very, very, very tight price action. Few to no opportunities to make money in this market. And for the time being, like, I'm just not touching Bitcoin. In the long term, I still think anything below 30K is a good spot buy. I've been saying that, but just look at this incredible lack of volatility. Why would you be trading this right now? There's no good reason. There's nothing to justify trading this right now when there are assets in the NASDAQ that are moving strong, and there's like clear narrative failures like the Apple earnings and its price action, like CJ pointed out. Why would you be speculating into this when you have all these other assets running and pumping and showing signs of price action or falling, and you have the opportunity to buy puts? I think that is essentially what we're seeing, is that people are more interested right now in trading the equity side of things than they are crypto. And that's why Coinbase pumped, Riot pumped, Mara pumped, all while Coinbase essentially traded sideways. So that's why I encourage you to, although I personally, am a holder of Bitcoin, I hate to trade it because it's so range bound, so riddled with algorithmic bots that are trading it, that it makes it nearly impossible to turn a profit if you're just trying to trade the 15-minute chart on Bitcoin. I just do not recommend that. But I have some shorts that I like for this week that I want to get into later. But before I do, CJ, pass back to you, my friend.
yeah, so why don't we talk about the fact just for a minute that interestingly enough, you have all these people starting to get bullish. Seems like a while ago, probably like a month or two back now. Remember the Barron's article that first proclaimed when we were back into the bull market with that lovely blue shining bull.
Oh, I remember.
So it's interesting now that we're starting to see like basically a lot of those shorts really get back to neutral, and you've seen retail long for the third week in a row, and COT is giving the first short signals in things like Dow and ES. Let's say, for instance, those work out, or let's say we continue this kind of correction or pullback 5 to 10% in the S&P. I think the key there is going to be like if we go down 5 to 10 more percent, what are those people who were previously bears who have flipped now bullish? What are they going to do? Because like if we decline and we're looking to buy that dip into 2024, like if that is the new bull market, which I still do think it likely is, but what I would say, what kind of scares me the most, or the idea that could be the most vulnerable for the market, is if we decline another, or we just, -5, -10% comes in, and then everyone comes in and buys the dip. All of the pundits and everyone who is sidelined comes and gets allocated because they're all betting on the idea that 2024 and 2025 are a new bull market. That's kind of scares me because that's exactly what happened before COVID, or right after COVID, but before everyone really knew what it was or its significance. Everybody bought that 5% dip, and then there was nobody really left to buy. And so if the market was going to get pushed down further and we were actually going to see bearish fundamentals, we could go much lower. So if we dip, that's going to be the key question. Are the bears going to buy this dip or not? If they short the dip, then that's actually going to be very bullish and probably will give you more conviction to go to new all-time highs. But that's a very interesting hypothetical that we could be coming across in the next like month or two. Also with seasonality, which I could get into.
Yeah, no, that's a great point, CJ. And I think there's an interesting kind of dynamic going on between the retail traders and like the hedge fund managers, because like I think you're right that retail traders, and the COT data backs it up. I mean, although they're getting bullish, it's like retail traders, they're typically on the wrong side of things. And when they see Apple falling like a dropping knife, like there's gonna be people that pile in and try and short these big tech stocks. And I think that will add fuel to the fire to the upside eventually, because like we've talked about, these hedge fund managers that have been short all the way up, and were forced to capitulate several times, they need to make some money back. So one way they might do that is by injecting capital into some puts, because things are crashing hard today. Here's Apple. Take a look at Coinbase. Already crashed through all three of those targets. MicroStrategy, Mara. I mean, all of these are down big. And if the puts pile in today, then tomorrow, don't be surprised to see a big turnaround, price to rally, and for some of those shorts to be squeezed out. It wouldn't surprise me at all. However, I will say this is the first time in a while, especially when it comes to like the S&P, where it's starting to feel like this could be the end of a secular trend. Like it could be the end of this positive trend. I'm not Nostradamus. I'm just saying this to me doesn't look great. Like when I see, this kind of rolling over formation at the top of the trend here, these bullish candles weren't looking too strong. And it was more of like a rollover than it was like this, like where it was kind of a blow off top, right? This is like a rolling over, which is indicative of a lack of buyers. And that's what concerns me, is like, who's really buying ES up here? And what's like going to be the catalyst to drive us above 4,600? I would say it would be a decreasing dollar, but we're not really getting that. So until we do, this is kind of some dangerous territory. Same thing can be said about the NASDAQ. Like, we've had some pullbacks throughout the uptrend, no doubt about it, right? They've had some pullbacks, but nothing quite like this, where it's like a lower high after what had been a period of very positive price action. So like just this alone right here like this lower high, has me concerned that we could plausibly see continued negative price action in the crypto related equities and in the high beta tech stocks that we talk so much about, like Microsoft, Apple, Amazon. Another one that beat to the upside. I think a lot of people might try and short this one and fill the gap, and tomorrow might wake up to find that their options are not worth very much anymore if you try and short this one right now. So basically, that was a long roundabout way of saying that I am sitting on my hands right now. But I do have some crypto assets that I think are looking decent for a short play. And I want to address some of the questions in the chat as well. But CJ, anything you would like to add to that analysis, my friend?
Yeah, I guess I'll go over some futures prior to crypto. Another thing I did want to just share briefly before we get into more charts. So this is from Peru Sexana. I saw share this on Twitter. But if you look at the 10 pre-election years, the last 10, we usually have the seasonality correction of about 5 to 10% from August to September. And then, things generally have recovered. So if we do have a dip like this, like kind of what I was saying earlier, it really depends on whether or not folks come in to buy it or not. But yeah, anyways, let's talk about energy first because I don't know. It's just like it feels like it's been really prevalent the last, couple of weeks. It feels like people on CNBC and just media in general and Twitter have been talking a lot about getting bullish energy.
Yeah, definitely. XLF, not just crude oil either. It's like all the energy plays they've been talking about.
Yeah. So, and like that's reflected in a lot of crowded longs in CL. Actually, if we go to just the energy futures in general, like for instance, Brent is in the same positioning. Same with RBOB, which is like unleaded gasoline. So basically every and heating oil, which has been a decent short today, and all of this stuff's kind of selling off, with the exception of natural gas. Natural gas really isn't doesn't have any bias in terms of like positioning, so I wouldn't be trading around that one. But every other energy commodity, whether it be CL or heating oil, is crowded with longs, and you're starting to see negative price action today, following last night, which should have been pretty bullish energy, which or oil specifically, with lower production and things of that sort coming up for supply. So I would be looking bearish energy, or just a potential higher risk to reward to the downside if we start continuing to see this like negative price action. So that's kind of the one area where I've been looking, as well as like short Dow, but also copper. Like we talked about silver and that whole idea of shorting silver. There's been a good amount of longs covering since last week's negative price action, but something that I think is an interesting replacement for that trade is potentially short copper, because you had a lot of let's look at what we had last week. A lot of people got long last week in terms of copper.
Wow.
So yeah, it's kind of like silver.
Yeah, very much like the same sort of positioning.
Yeah, it wasn't as intense as silver, but definitely last week was very notable, especially just because we've gone down. Like there hasn't even been any bullish price action. So I like shorts in potentially there, and then looking, as like yesterday's high, as a nice stop. So that's another one that's been just like very weak as well. But and then oats continues. It was interesting because you saw things like a lot of the grains like corn and wheat get absolutely demolished last week, but oats didn't. We'll see if time will ultimately tell what happens with that one. Positioning is still way stacked to the upside, so I like potential shorts there. But that's really what I'm looking at. I mean, it's really nice to see the crypto equities down today. I guess it's just nice to be patient with those. But
Last week, I think during every episode, you said at least once, I feel a bit underexposed to the crypto equities. So now you're being validated this week. And but before I let you off the hook, CJ, I did have a question regarding some of the crypto related equities and some of the Magnificent Seven stocks. You talked about Apple and how I would definitely consider that a narrative failure after it beat earnings, and it had made a 52-week high and is now pulling back substantially. We're seeing all the other. We're seeing all the other. He's thinking. We're seeing a lot of pullbacks in the other big names as well. Any of those in particular that you find like maybe favorable short plays in the medium to longer term here?
You mean like crypto equities?
Crypto equities or anything traded in the queues that we talked about, like any of the stocks that have really had earnings, or because I think you're so right about the narrative failure with Apple. It's like that was clear as day. It would have been great to have been short Apple this morning, of course, but in obviously hindsight's 2020, but that narrative failure was there. Is there anything else that you're looking at in terms of equities, crypto related equities, in terms of like some possible plays to the downside this week?
Yeah, I think they've been beta to like both Bitcoin and the NASDAQ. So I think if you see those latter two components selling off, which they kind of are, NASDAQ isn't, but Bitcoin's sort of been weak, you'll probably see continued negative price action in the Bitcoin equities. I don't know if I'd really short them. Like I've said, I just can't bring myself to buy puts on some of this stuff. I'd rather just let it fall. Be content to buy it lower. In terms of like shorting equities, I'm just looking at short Dow and short ES. I also like the energy plays in terms of like, looking for risk off price action if that's what we're going to see. As for like individual names, I haven't traded a lot of I don't really trade a lot of puts around individual names these days. Tesla certainly looks to be breaking down a bit, but yeah, I did catch myself looking at the SQQQ chart today, and I'm like, why am I doing this? But mainly just looking at the short futures and indices, really.
Yeah, I'm with you there. I think this is a potentially interesting chart. This is Mara, Marathon Digital. It has earnings tomorrow after hours. What do you think? You said you've been waiting for a pullback. You're happy to see them pulling back, waiting for a better chance to buy. What do you make of Mara as we head into earnings here? And I can kind of give my thoughts as well.
Yeah, I don't have too strong of an opinion on Mara. I just think that you have to kind of imagine a couple different scenarios. Like, if ES and the NASDAQ actually do really start going down here in the next week, like they really even haven't gone down yet, relatively speaking, when compared to the crypto equities. Those look like they're, crashing, whereas, the others are just slightly off their highs. So, I mean, you have to imagine that correlation remains. As for like earnings individually, most of the crypto earnings have been somewhat uneventful. So unless Mara does something very unique, like they bought, 100,000 new machines or something, I don't expect a whole lot of price action. But what are you looking at, like shorts on this, or what are you thinking?
No, I wouldn't short either Mara or Riot. Both of them have earnings this week, and I think both will beat earnings on top and bottom line. Now, I think Apple has proven that doesn't mean jack squat. If you beat on the top and bottom line, you can still go ahead and see some very negative price action, and that's pretty apparent there. But I do think that they'll beat on the top and bottom line. However, CJ, this level here is a highly critical level for Mara, right below $15. We've seen significant sell pressure, significant supply absorption as well in the past. And I think we do actually see a turnaround and a bounce tomorrow in some of these big crypto related equity names, as people kind of, one, lighten up on any puts they had purchased, heading into earnings, because you don't want to be holding, well, unless you think that price is going to crash and they're going to miss earnings, you don't necessarily want to be holding puts into earnings. And I think we may see some put capitulation tomorrow before we get that earnings report after hours, and a brief turnaround in both Mara and Riot. You can do the analysis, pretend like these are the same thing. They're basically trading 1-to-1, and it's the same people trading them, really. So it doesn't really matter which one you're looking at. The same thing applies. They're just at slightly different prices, really. They have about the same amount of hash power, so they're almost identical companies. So that's why the stock looks so similar. But in any case, I think both of these two. Oh, actually, Riot has earnings on Wednesday. Apologies, not Tuesday. But again, I wouldn't be surprised to see some people lightening up on these stocks as they head into earnings, because, I expect them to beat earnings on the top and bottom line. But again, that doesn't mean anything. If they beat on the top and bottom line and start to pull back or continue to pull back, then I agree with CJ. The best play, just be patient and wait for it to level off, consolidate like we saw here, like this period of consolidation. If I saw that, I'd be a lot more eager to buy than seeing something like, this, obviously. So wait for the pullback. It does appear to be coming. And if we do get a brief turnaround tomorrow, don't get caught up in thinking that, oh, this is going to continue into earnings and we're going to see this, run up. It could just be people lightening up on their puts. So just be cautious for that if you're trading around Riot and Mara. But let me dive into a few crypto stocks. Someone asked earlier, Monte, are you shorting algo here? I am tempted. That's a good question. And you're probably referring to the post I put in Discord about how I like algo as a possible short play. And I don't want to pick on algo or anything. I mean, the reason why I liked it as a short play was because it had a very nice run up in the last, essentially 48 hours, which was more or less inexplicable. I think what happened was, and this is just based on my analysis of the CoinGlass data and the liquidation data, is that here on this Saturday, August 5th, which was 2 days ago, a lot of people got short. The funding rate was overwhelmingly negative, and for good reason. This is a breakdown level, right? People were trying to short this thing into oblivion and ended up getting squeezed out. And then those same traders probably kept trying to short this, as it showed signs of weakness, and then kept getting squeezed out. So whenever you see that, and then you have this double top formation here as well, and it coincides with, this previous local top, I think all of those paint a relatively negative picture for algo and set it up as a good short trade. So I'm not in a trade right now, but I do think this is actually a decent level to enter a trade. Or if you want to be a bit more conservative, wait until we break right below this level here. Boom, 10.92 is where I'd put the trigger, right around there, and then play it down to back towards the lows. Not, this is just the 15-minute chart, so not too much of a move, but I think it could very well happen in the next couple of days here if we see the market pull back. So yeah, I like algo as a short just because this double top formation, this weakness here, and also the strength that it showed in the previous 48 hours on the back of what was essentially just short liquidation. So no genuine spot buying was occurring here. This is more just shorts getting liquidated. Whenever you see that, it tends to retrace. So that's kind of what I'm banking on. And yeah, Mike, I will be entering an algo short after this episode. Or why wait? I'll go do it right now.
Yeah, I mean, it's kind of disappointing. A lot of these, like, remember when we were talking about curve and it actually looking bullish? It went up for like probably 5 minutes after that. And then everybody just took profit on that trade. It's like there's no new money. It's like Monte, me, and then like 15 other people trading on, these crypto exchanges. It's very difficult conditions right now.
Yeah, it's a dog eat dog market. Very much so. Opportunities are sparse, but they are still there. But you're right, CJ. It's like, especially when it comes to native crypto, like when we're talking about just like Bitcoin or altcoins, there's no new money flowing in. Like, it is all flowing into the equity side of things, like Coinbase, Riot, Mara. That's evident from their price action, right? Millions and millions of dollars of volume done in the last month, while Bitcoin essentially lingers in purgatory and altcoins are just like, chopping around. So until we get like a catalyst that would provide that new money, I think this is kind of the range bound market that we are going to be forced to deal with. But yeah, that's all I got. Anything else you'd like to add today, CJ, before we wrap things up?
No, I think that's about it. Don't forget, if you guys would like to see our trade insights and also join a Discord community with a ton of other traders all throughout the world, check out tradethechain.com for a 14-day free trial. If you don't like it, money back and all of that good stuff. But Monte, yeah, that's all I got. I'll leave it with you for the final words.
Awesome. Thank you guys so much for watching. Thank you for the questions. Great stuff. Appreciate you as always. Looking forward to an exciting week of trading ahead. Lucas, Ryan, who else was in the chat today? A bunch of others. Mike, thank you guys all. Sorry if I missed you, but really, really appreciate the questions. And like CJ said, we'll be hanging out in the Discord for the rest of the week, for the rest of the day. Also, we have a trading rebellion with Nick at 1 p.m. Central, 2 p.m. Eastern. Don't forget about that as well. But other than that, have a great rest of your day. Happy trading, and we'll see you then. Take care.